Good morning, everybody. It's TK, ReadySetFutures.com. It's about 6:30 a.m. on the 22nd of November. This is your daily wrap-up for the 21st of September. It's going to be a quick one today, folks. I don't got much time. I need to go to work, but I want to make sure I'm able to kind of close the loop with you guys. I saw we got a couple subs overnight, so I want to say thank you, guys. Go ahead and view videos, leave some comments, let me know your thoughts. Moving now into action from yesterday, just a quick rundown of the two major announcements that we had. We had the Bank of Japan and the Federal Reserve coming out yesterday, as well as we'll talk about the EIA inventory report for oil. Bank of Japan changing the tools in their toolbox, moving away from direct asset purchases and over to two new tools, or at least primary tools, one being the reverse interest rate, and the second being what we could call a reverse operation twist. And in this case, all that means is they're trying to steepen the yield curve again. So that's their announcement. Bank of Japan coming in a little unexpected. I don't believe that the general market thought the reverse operation twist was really quite in the cards. However, looking at the Federal Reserve doing what they do best, folding like a deck of cards on the interest rate hike and interest rate renormalization. They stood pat at 0.25%, and some of the language. I don't want to get into dissecting word for word what the Fed said, because every time over the past, I don't know, year, 2 years, they come out with more aggressive language in their statements. They say they're data-driven, data-dependent. And in this case, to their credit, maybe data didn't show raising rates was the right thing to do. So anyway, we rolled over on interest rates here in the U.S. and did not raise them. You can see today, this is the ES. You can see right up here in the upper left corner if you guys ever need it. This is the ES action yesterday, right off that lower volume boundary, and boom, just lift off again yesterday and today, reaching out for this volume point of control. But if you look deeper in the market, I can't do it today. I just don't have the time, guys. Getting down into that 5-minute or whatever 100 tick, 800 tick bar range, you could see the chop that had been going on since Friday of last week, Jackson Hole Summit, and then boom, once we get the announcement, there was a couple stop runs north and south, and then we just lifted off. So again, certainly a bid in the market this morning. This is today's action on the far right. And away we go. Moving over to crude, similar to story here. I drew in a secondary trend line this morning. Yesterday, we talked about trading right at the lower value area boundary and our shift lower in volume point of control, which we could expect. I don't know. My experience has been when that happens, we find a significant shift of the volume point of control down to where business is being done. We find trade moving then away. I'm not saying that that's causal, but we have seen trade move away. Also, more probably reliant on the Federal Reserve than this volume shift, but no doubt, we are on a northward move. Again, for me, swing trading, I do feel that this is part of the larger move lower. And I will get to it this week and showing you guys my commitment to trader studies, and that it's commitment to trader supports a lower trend here, but clearly we're in an upward move maybe as part of that. Moving over to gold, probably the most interesting of stories that we've got to share today. Again, a second trend line, just showing that there's a downward slope to this market action. And if you've been listening, that we've been talking about gold going lower before it goes higher. Again, I think this is all part of that move. We also showed, boom, 1, 2, 3, 4 days, not finding acceptance below the volume, lower value area boundary. And yesterday, this is obviously central bank driven, or maybe not obviously, but for me, this is central bank driven, right? Gold, depending on how you feel about it, it may be, in my opinion, it has intrinsic value. It's been considered money for over 5,000 years. Barbarous relic, perhaps. Also maybe new age monetary scheme in some others' eyes. So in any way, so gold, right? We get a standing pat on interest rates. The easy money spigot stays open. The punch just got refilled, and currency debasement continues on. So that's exactly what we saw yesterday. As currency continues to debase, at least the reserve currency that gold may be, considered valued in or denominated in. And sure enough, we there's a huge bid. But interestingly to note, gold came right up to our volume point of control and then sold off. And today we continue to trade around it. This is an interesting market. I see right here is our 38.2. This is our first Fibonacci retracement. I don't know. Anything could happen in this market, right? If we're looking at purely a distribution scheme or an accumulation scheme, this thing has another leg down before it moves much higher. That move much higher might come now. I don't know. We just need to kind of wait and see what this market does, especially when we get up here around this trend line of resistance that's held really since July. So, like I said, interesting story in gold in the overnight. Moving over to copper, Dr. Copper, I'm going to say it, folks, proved us wrong. We've been talking about a short move in copper since back here on the 17th, and certainly did not get it. So yesterday we talked about volume points of control shifting higher and expecting a move away, just as we talked earlier in crude. That pretty consistently happens in all markets, at least the ones that I've seen. I'm not going to quite write it off yet, but as you can see, we're trading above this upper value area boundary, and if we continue to gain acceptance, we could probably expect to move back higher here. I'll zoom out for you guys. As you can see, copper's been trading in a range really since the end of last year. I'm going to call it October of last year. We entered into this range between 2,054 and 2.307, and we may be headed higher back up to the top of that range. Although, if you wanted to look, sure, at a trend line, boom, right here around that 50% retracement, that could be another target for you guys if you're looking around the $2.25 period. So that's our action for copper. You can see yesterday we had a bit of a bar down, couldn't close below that lower value area boundary, and we have subsequently caught a bid, which is interesting considering one of the major smelting operations in China went bankrupt, just the other day. So this is why I love the market, folks. You never can tell. There's no guarantees. You trade your opinion, you trade your premise, and you take the consequences for your decisions. And that's one of the things that I truly enjoy about this market. So, like I said, it's a short one today. I got a boogie. I hope you guys have a great day. I hope you guys have a super successful day. And I will check you in the evening for a wrap up of the day's action.